What's up everybody, Joseph Hadaway here. Today we're going to talk about something I actually don't talk about near as much as I probably should on the channel, and that's investing. If you followed me for a while, you know that I highly recommend ETF investing, whether you're a growth investor like me, a dividend investor, or absolutely anything in between. But with thousands of ETFs out there on the open market, even here in the US, much less overseas, other markets, how do you know which ones to pick? Outside of the underlying holdings, are there anything that separates them, makes one stand out from the other? Well, in today's video, I'm going to share with you the 3 criteria that I use when picking an ETF to add to my portfolio. Alright, number one thing that I look for when I'm trying to select an ETF to add to my portfolio is its return or its yield. Now, using VTI here as an example, not financial advice, we can go back and see it's performed very, very well this year to date so far. And then we can go back over 5 years, and outside of a few drops here and there, we can see it's performed extremely well over a long period of time. And then you compare and contrast that here with like the ARK Innovation ETF, which is down a little bit, mostly flat over the last 5 years with no dividend yield at all. And well, for me at least, it's a pretty easy pick. I want ETFs that grow. I want my investments to grow. I want my money to work harder than I do at my 9 to 5 and my side hustles combined. If my money's going down or even remaining flat, then why am I investing it? I might as well just put it in a savings account where even 0.1% interest is better than the 0% I'm getting. But of course, not every ETF is solely based on capital gains growth. Now pulled up, I have SCHD, another very popular ETF you'll see talked about by probably every single dividend investor on Twitter. And you'll see here, compared to VTI, its growth rate is much smaller, but it is still growing, which we do appreciate, especially in a dividend ETF, but it has a much higher dividend yield than VTI, sitting right now right around 3.5%. Now, when I'm looking at ETF, I need one of those two things. I either need growth or I need yield at bare minimum. And that said, ETFs in my mind work the same way as stocks. If your investment is yielding 5% a year, but it's dropping 10%, then you're losing money and all of a sudden yield doesn't matter. So I either want less dividends and higher capital gains growth, or I want more dividends and less capital gains growth, depending on the type of investor you are and the type of fund you're looking to add to your portfolio or your lineup. Depends on which one is more attractive to you. Alright, and then moving into number 2. The number 2 thing I look for when I'm choosing ETFs for my portfolio, that is the expense ratio. Basically, the expense ratio is how much the ETF quote-unquote charges every single year just for existing. Basically, what the administrator of the ETF does is at the end of the year, they take a little bit of the growth off of the top and they keep that for themselves as a little bit of a fee for putting the ETF out there on the market and managing it really on your behalf. That said, I don't like paying money to make money, especially when it comes to investing. I like to keep my ETFs as close to free as possible. Luckily, it's 2023 and there are a lot of ETFs with ridiculously low expense ratios. Some of my favorites include, again, VTI at only 0.03%, SPY at only 0.09%, QQQ a little higher but still within what I believe to be an acceptable range at only 0.2%, and again, ARK at 0.75%. All of these beat basically every mutual fund out there. I love the low expense ratios. I mean, with any of these, you are paying pennies on the dollar. Less than pennies, really, to have your funds professionally managed and have a pre-diversified portfolio of stocks just at your disposal that you can buy in one click. Of course, every single person will have a different hard and fast rule on this. Mine, I try to keep most of my expense ratios below 0.1%. Because again, I'm trying to spend the least amount of money when investing as possible. I'm investing so my money can earn more money and grow, not to spend money and lose it. The number 3 thing that I look for when choosing an ETF is the underlying index. Am I buying an S&P 500 ETF? Am I buying a total market ETF? Am I buying a NASDAQ 100 ETF? I like to know what's going on in my portfolio to make sure I'm not too overweighted in one sector, especially when you get into the more tuned in ETFs And I like to make sure that I'm adding the right sectors and the right indexes to my portfolio to keep trying to achieve the goals that I want to achieve. For example, if I'm trying to achieve a heavy growth portfolio, I'm probably putting little to no money in a bond ETF. But let's say I'm retired and I'm looking for a little bit of stable growth and a solid dividend payment, then I'm probably not putting any money in innovation or NASDAQ 100 ETFs. It's all about the trade-off. It's all about picking the sectors for your portfolio to have the desired outcome for your life situation and your financial goals. And those are my 3 major determining factors when I'm trying to pick an ETF to invest in. I'm a primarily ETF investor. I'll shout that from the rooftops. I believe it is the best way for the vast majority of people to invest. And I'd recommend you do the same with your money. Pick some solid ETFs, set up your auto buys, and go about your life while you build wealth passively. It's really that simple. If the stock market is a game to you, or if it's exciting, you either live a boring life or you're doing it wrong. Best way to build wealth, buy and hold long term. That said, thank you all so much for watching. Make sure to follow me on social media and also check me live. I am streaming 6 to 8 a.m. Eastern every Monday, Wednesday, Friday, and I'm having so much fun doing it. Come hop in the chat. Come say hi. Maybe even if you got a basic budgeting investing question, I'll answer it live on stream. We'll see how it goes. And yeah, subscribe to the channel. Thank you so much for watching, and I will see you all again next week.